Hi there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. Um, Over the last probably 2 or 3 years, I've been really focusing on primarily on intraday futures trading as well as options. And I kind of got away from stock trading, particularly intraday stock trading. And so I decided this week to kind of get myself back into that. And so as a result, I shared some setups with a number of our members here, and we had some good trades this week. And so I figured I would kind of go through with you and show you the trades and what was behind them, and see where we go from there. So at any rate, this was a setup they had a couple of days ago on this GPUS, and so this had actually gapped up. From the prior day, right there, and then after that, there was obviously a major amount of follow through there. And then right over here, there was this little pullback and consolidation. And that actually represented the foundation of my trade. We can also see right here, this is the volume weighted average price that's kind of passing through there. I'm not really trading off of that, but it's an odds enhancer for what I'm doing here. But right here, this was an area where there was an exhaustion of sellers. Okay, and so right here we have that very bullish candle as price rockets out of there, essentially as buyers had to run up the price chart until they encountered willing sellers. And if we think about this little area right here where price is consolidating, we could think about the shares that are offered up by the sellers. We could think of that as the supply of shares within that region. And if we think about the shares that are acquired by buyers, we could think of that as the demand for shares in that region. And so within this region, supply and demand are in balance. And then right here, supply and demand go out of balance because essentially there's that exhaustion of sellers. As a result, there is no more supply there. And so what we think about in terms of how we trade, which we're trading this supply and demand concept. And so what's left in its wake, once there's the explosion out of there and the exhaustion of sellers, what's left in its wake is only demand because there's no longer any supply. And so when price returns to a qualified demand zone, that is the foundation for a bullish trade out of that zone. And of course, there has to be, it has to be qualified in terms of a number of factors. Okay. But we can see when price came back here, if you notice right there, price had just kind of kissed off, came back, kissed off with this wick and then went again. That was almost confirmation that this was going to be a good zone when price actually returned here a second time. And so when price returned here, okay, that was actually where I got into a trade. Okay. And so we can see I got in here at 686. And then over the course, we're basically looking at a 2-minute chart here. So about the course of about a half hour, price ran up to here, and basically I got out right here. Okay, and so we could see in terms of the trade, I was getting in at 686. My stop out was at 650. So that meant that each unit of risk was 36 cents per share. So of course there would be $36 per share in terms of every 100 shares that one would trade. So that's the risk profile, and then that would represent a 1-to-1 trade, a 2-to-1 trade, a 3-to-1 trade. So if you were actually getting 3-to-1, you'd be getting 3 times 36 or $1.08. And so you can see up here when I got out here, I got out actually at $1.04 profit. So really, I got out at like a 2.9% risk reward. So I call it 3-to-1 there. So this was a 3-to-1 trade. Okay, so let me show you now, because obviously one could take a chart and throw a whole bunch of stuff on it and put a bunch of arrows here and go, well, I got in here, I got out there, I'm a hero, all that stuff. So that's obviously not very informative. So let me in fact take you back and let me show you what I was looking at the time that it happened, and I'll take you through the sequence of the trade. All right. So this is actually our Slack room at Precision Trading Labs, and this is where we convey information about setups, and we have interchange and an idea flow with our members. And so this is where our intraday trade channel here that I just set up here. And so this is what I shared with all of our members here this week, and of course a number of our members took these trades as well, and we're pretty happy with them. So here's what I was looking at on that GPUS that I was just showing you here. So again, here was the gap from the previous day. Again, this is a 2-minute chart here. So this is the gap here. Okay, price came up. Notice then it kind of pulled back here and then rocketed out of there. Again, that's the that there is that demand zone that I talked to you about a moment ago. Okay, and then over here, as I said, I monitor the volume weighted average price. I am not trading directly off of that. It is not my trade trigger. It is not the foundation for my trade, but it is an odds enhancer for my trades. So when that is in the vicinity of a trade zone, that's generally a good thing. Okay, so when price now came, I was waiting for price to come back here, and then again, that would be the foundation of the trade. Again, there's that reward to risk ladder that I just showed you before. All right, so that's what I'm waiting for here. Okay, then if we now flash forward a few minutes, so price actually came back here. En route to coming back here, I was also keeping an eye on what was going on above this level. Because at that point, then, the same way we have a demand zone here, okay, supply zones form in lower time frames above my trade. And so those, of course, could represent either barriers or impediments to my trade, or at least speed bumps. And so at that point now, I was looking at these two regions right here. And then because of a number of factors that I was evaluating, even though I had marked this up, I decided at that point, you know what, wasn't really going to worry so much about that level, but it would be that level that in fact would be conceivably be the where the trade might end. So at that point, though, I'm kind of comfortable with this because I can see that kind of as a target, getting 3-to-1 was realistic about the way this formation was. So at that point now, when price pulled back here, this is where I got into the trade right here. All right. So if we now flash forward, uh, price then obviously started to go up there. It did get to this region of where I had some mild concern, but I had already decided that I thought it was very likely that price would break here, and then it would end up probably there, and then at that point, then I would have my 3-to-1 trade. Okay, so if we now continue on the slideshow there is actually where I got out right there. Okay, and so at that point there was my 3-to-1 trade. All right, so there was that sequence. So I'm going to show you now a couple of other trades that are actually fairly similar to this, and these actually went on today. Before I go on here, though, let me show you um, where I'm actually getting these trades from. And unsurprisingly, there's no magic to that. Um, they're basically coming off of my symbol list is basically coming off of a hot list. Okay, and so this is what I was looking at this morning. All right. And of course, anybody that's done any sort of trading, or at least most people, they're familiar with this concept. This is just generated by pretty much almost any platform or really any trading website. You can get a hot list. And what this is showing, of course, is in this particular one, what I was looking at are the symbols that had the greatest percent move on the day. So it's not the greatest absolute move in terms of dollars and cents, but it's the greatest percentage move based on its price, of course. So naturally, of course, you're going to have a whole bunch of smaller, uh, cheap stocks there because obviously it's a lot easier to get a big percent change off of a cheap stock than a more expensive stock. But having said that, there are any number of real stocks that have, market capitalization and good volume, and you can get you don't have to be trading penny stocks at all. So this is what I was looking at. But what I'm doing, of course, is as I'm looking at this, I am qualifying it. I want to see how much volume they're putting up here. Okay, so I'm not interested in trading stuff that has next to no volume, nor am I interested in trading anything that's like I'm not trading sub one, I'm not trading penny stocks. Again, there's nothing wrong with trading penny stocks. It's just not my game. All right. So I'm looking generally, but I was looking for in particular here for stocks that are anywhere from, let's say, at least a couple of bucks, and maybe even up to, let's say, 20. That was what kind of I was looking at here. So the stocks that I was trading today, and I'm about to show you, was this NWE, which you can see is right there. And then I was also looking at Ouster, OUST. Okay, so at the time they were kind of both sitting roughly at the top of this level here. And basically what I was looking to do then is to then start flipping through the charts until I found the patterns of what I was looking for. And generally what I was looking for were gaps that then showed some major follow through, and then ultimately I was looking for a retracement back to a demand zone of what I just showed you on that GPUS symbol. All right, so that's what I was looking for. So again, all I'm doing is just bringing up the hot list and then evaluating it. Then making sure that there's sufficient volume. I then start flipping through until in a lower time frame, generally kind of 1 minute to 5 minute charts. Let's say an hour and a half after the close, or excuse me, after the open, or even let's say a half an hour after the open, I am then I'm essentially finding my core setups in order to then look for retracements back to demand zones in order to go long. So that's generally that's the process. All right. So here is the second trade that I had today. So this was this NVE here. Okay. And so what right here again, here was the setup here. Okay. And price had then dropped. This is what's referred to as a drop base rally formation. Okay, where price came down, consolidated, popped. Again, this is where we had the exhaustion of sellers here. Okay, and then when price pulled back to this region, this is where I got in. Okay, so again, this is the foundation. This is the setup for the trade. Right there is the trigger. Okay, okay. Notice right here, this blue line here, or this blue curve. That's the VWAP. That's the volume weighted average price. Again, I'm using that as an odds enhancer for this demand zone. Generally, I like to see it generally in the vicinity and really optimally almost like in the zone or as a backstop for the zone. I find that that's generally a good odds enhancer for a setup. So right here again, here's the pullback, and then right here is where I got into the trade. I got up to this region. This is where I thought price might actually get stopped. So as a result, I took the trade off right here. So this is actually a 2-to-1 trade. And in fact, what I actually did was I took 3/4 of the trade of my position off here, hoping or thinking that then price, it might actually kind of drive through. This was really not, in my estimation, a great supply zone. But it certainly made sense that this might be an area of concern where the trade would at least stop, or at least this would be a speed bump. And so as a result, I took 3/4 of the trade off so that I knew I was going to get paid. I then pulled my stop to break even. And so at that point, then I would be running a free trade. Alas, this did not work out on the last piece of the trade. It pulled back. You can see right to that over the course of that, I don't know, about 15, 20 minutes, it pulled right back to there. And then I just got stopped out there. So that was that trade. Okay, but again, let me show you now how that actually developed. Okay, so let me move that over here and let's go back to and let me get the sequence here on that. Okay, so here's what I was looking at on this setup here. Okay, here was the gap from the prior day. Okay, notice now there's the continuation, and then notice right here we have this drop base rally formation. Okay, and so this is what I was initially thinking. This is where my setup was going to be. Okay, and so I'm now waiting for the pullback to occur right here. Okay, but in fact, what happened was this is what we were just looking at here. Okay, but notice now price came up, then came down. It actually came right down to the VWAP here. Okay, it bounced along again, it respected the VWAP again, and then it actually kind of took a bounce here. Again, I don't trade off the VWAP. For me, I need the VWAP in conjunction with a demand zone. Okay, and so now notice that when price comes up here, okay, it then created more or less kind of something similar to this. And so it essentially created another demand zone higher up here. And so it's essentially now I'm not waiting for a pullback here, but I'm waiting for a pullback now into this second higher demand zone. And so here was my original reward to risk ladder here, showing my 1-to-1, 2-to-1, 3-to-1 trade. And then there's my risk profile. Okay. And so you can see the zone here is what, 14 cents deep. And then I gave it basically an extra, what is that, an extra 8 cents. I actually gave it a few extra pennies here because I was in the vicinity of the $2 round number. And so a lot of times market makers, I don't necessarily mean literally people, but the algorithms, they'll oftentimes go stop hunting. And so they'll kind of let things get knocked down to 199, 198, 197, and then they'll allow it to kind of keep going. So a lot of times I'll just give it an extra couple of pennies on top of what I would give it. Normally I would have kind of given it just an extra nickel here, but I gave it like an extra 7 or 8 cents here, or an extra 2 or 3 on top of that, just because we were in the vicinity of the $2 round number. So at any rate, that was the original setup here. But now here's the second setup. Okay. So right here again, this level here was a dime deep from 66 to 76, and then I gave it an extra nickel up here. And so each unit of risk was 15 cents. So that's a 1-to-1, 15 cents, 2-to-1, 30 cents, 3-to-1, 45 cents. So at that point now, this is what my trade looks like. Okay, I'm waiting for now the pullback to occur here and not there. And if you notice right here, you can see the VWAP is now drifting up. And so again, that's kind of looking almost like it's going to be a backstop for this demand zone. So for me, I'm liking all of this. Okay, so notice now price came back, came into this zone. Okay, so right there's the demand zone, there's the VWAP. Okay, and at that point now, I'm basically the trade is triggered. So I've gotten in at 276, and now it's kind of wait and see what happens. If you notice right there, you can see that little notation there. This is for those of you who are new with this, that's a bar countdown timer. Depending on how you trade, you may care about how when a candle closes, what is it doing? Is it trading above something, below something? There are various criteria there, and so that'll tell you when in fact the candle is going to close. So since this is a 1-minute chart, okay, this is telling me that there were 49 seconds, so 11 seconds had elapsed on this candle, and there were 49 to go. So that's what this is. Also, you may see here, this is just something I'm studying here in connection with the VWAP. I'm kind of looking at the distance of the VWAP above and below for various criteria that I'm trying to evaluate. Anyway, so anyway, there's the setup, there's the trigger, and then we're off. Okay, so at that point now, I had gotten up to here at 2-to-1. Right in here again, this is not any place that I would necessarily short, but in looking at it, I just decided, you know what, this could be a place that it could stop this trade. I don't really know what's going to happen. I do not have a crystal ball. So at that point, I decided I'm going to take 3/4 off, and I will then, then leave a 1/4 in play, and then actually look perhaps for that to be my second target at 3-to-1. Okay, so and then at that point, then I pulled my stop from break even, from 261 up to 276. Okay, so as we know already, because we saw this already, this did not happen. In fact, I just got stopped right out, right there, and so that was the end of the trade. But at that point, though, I did get paid off on 3/4 of it, so that was okay. All right, so that was that, and then let me take you to the last of the trades here, and there right here we have this OUST. Okay, so again, price had gapped up here. I actually don't see that here, but price had actually gapped up here. Then there was some major continuation there, and then right here you can see, okay, price had come up here. Okay, notice it created that first demand zone here. Okay, but then in fact it created another demand zone above. Okay, originally I was looking for the pullback here, but in fact then it came up here, and then at that point now price got in there and I got out there. And again, it was the same exact thing that I did on that prior trade. I took 3/4 of it off, looking for this thing to go further. Again, this was not a qualified supply zone for me. And so I didn't necessarily have to expect that this was going to drop, but in fact, it did. So in fact, I was wrong. Although I won't necessarily say I was wrong, because more often I am right about this. But even if you really know what you're doing and you're right a lot, that means that you have to accept that you're wrong at some other times. So even if I'm right 60% of the time about gauging these zones, that means that 40% of the time I'm supposed to be wrong. Well, this was one of the 40. Because you can see it actually then dropped out of here. Because you might be looking at this and go, well, if you marked the zone there, why didn't you just hit the reverse button and short it right here? Well, I didn't gauge it to be that. I wasn't didn't have that level of confidence. But obviously, in retrospect, that's what happened here. So again, I got out at so right here, I got out at about 1.5 to 1. And so I got 3/4 of my trade at 1.5 to 1. Again, I left the 1/4 on to continue on, but alas, that did not happen, and I got stopped at on that last one. And again, I got stopped at break even, so I did not lose anything on that last piece. All right, so let me show you now again how that actually played out, kind of in real time as you know as this thing went frame by frame. Okay, so here's what I was looking at when okay, so right there, there's the gap, there's that continuation that I mentioned before. Okay, and again, this is the first demand. This is that demand zone that I was looking for initially. Okay, but then when we continue forward, then that did not happen. Price came up, came down, consolidated again. And at that point, though, I qualified that as another potential trade that was higher up than the first trade. And again, we can see the VWAP kind of rolling right through there. But again, this is the standalone, and then this is the odds enhancer for the trade. Okay, and again, so here's my risk reward ladder. This was the original reward to risk ladder right here. Okay, so you can see this zone was 16 cents deep, and then I gave it an extra nickel. Wholly coincidentally, not there was no magic to this. This is just a pure coincidence. This zone above here was also 16 cents deep, and so again, I gave that an extra nickel. So in both cases, my the reward to risk proposition is essentially 21 cents of risk per unit. So this is a 1-to-1 trade, 21 cents, 2-to-1 trade, 42 cents, 3-to-1 trade, 63 cents. So that's how that works. Okay. So again, I'm waiting for the pullback into this zone in order to then go long after this exhaustion of sellers here. Okay. So now we flash forward a few minutes here. Price came up here, dropped here. Okay, and when that happened, again, something formed above here. Okay, this area of consolidation, and as I said before, even though for me it did not create a qualified supply zone, even though it turns out that it by all appearances, in fact, it did. But at the time, I did not judge it to be that. But nonetheless, I thought it made sense to be prudent and at least get paid off on a good chunk of the trade. So again, I took off 3/4 of it at 1.5 to 1, and then I pulled my stop to break even on the last part of it. And again, as I showed you before, that did not work out, and I got stopped out on that last little piece. Okay, but at any rate, there you go. So again, all of these were all setups that I had shared in our Slack room, and so again, a number of our members actually took these trades and profited from them. So anyway, thank you so much for your time. This is Mitch Firestone with Precision Trading Labs, and I'll see you next time. Take care. Bye-bye.